So we have. Good morning. This is the audit committee meeting. I'll forget what I just said. Let's move to the agenda. We have a roll call, you said. Behind tab 5, the minutes from the last audit committee meeting. I assume that the audit committee members had an opportunity to review them. Are there any comments or concerns about them? If not, could I have a motion to approve the minutes?
So moved.
Second? Okay. We have the audit committee's all here, right?
Yeah, the audit committee is here. Just if I may interrupt. So we have our audit committee, just so we're clear on the record, if you don't mind. So I just read who's here. So we have our audit committee chair, Joan Sullivan, here in the Albany office, and then committee members. We have Beryl Snyder in New York City, together with our new board chair, Lisa Gomez. Al Carney is joining us via Zoom. And for other members present, we have our newest member, Secretary of State Robert Rodriguez, who's here in the Albany office. So a very warm welcome to him. Ken Evans is also here, and Wellington Chen and Jerry Bromsky are in the New York City office. So that's who we have for board members who are present. So we do have a quorum for the audit committee. And if I could just ask, which members of the committee moved and seconded the minutes? I didn't catch that.
I seconded it.
Okay, and then Beryl, you moved?
Carol
I move, yes.
Okay, thank you.
All right, so the minutes have been accepted and approved. The second item is one that I know is near and dear to most folks' heart, and it's good reading material for late at night. It's a review of the financial statements, and I'm going to turn it over to Kim to go through. Before you start, I just want to give kudos to Kim and her staff. These are very, very complicated to pull together, and there's so much information, and there's not a lot of time to do them. They're due June 30th, and you're pulling it off. Kudos to you. I also want to acknowledge Jenna's staff who worked with KPMG on the audit side of it, and I want to thank you. This is a Herculean effort to get these done. So Kim, with that, please.
Thank you, Joan. Good morning, everyone. Before we move into the details, I'll give a quick summary of the highlights of this year's audit results. KPMG expects to issue 3 unmodified opinions on DASNY's financials, the supplementary information included with the financials, and DASNY's compliance with the state controller's investment guidelines and DASNY's investment policy and guidelines. KPMG did not identify any significant deficiencies or material weaknesses in our internal controls. Therefore, they won't be issuing a management letter. Unless there's questions, I'll turn it over to KPMG for the required communications.
Thanks, Kim, and good morning, everybody. It's great to be here presenting these financials in such a quick turnaround. Joan, you took all the words I could say about the greatness of Kim's team and how quickly it turned information over to us, as well as the assistance the internal audit department provided us throughout the audit. We do have a presentation put together. I'm just going to quickly make a reference to the financial statements, being that for the most part, the financial statements will be similar to what you've seen in the past. However, this was a big year for DASNY. GASB 91, as we had talked about back in the fall, was adopted. And as a result of that, certain activity was required to be removed from the balance sheet of DASNY statements, as well as from the net positions. There's a summary of that activity in note 2S. Ryan will go through some of the procedures performed, but we evaluated how management went through and adopted that pronouncement, and ultimately concluded that everything was appropriately identified and removed from the financial statements and did not impact our opinion in any way, shape, or form. So if we can move on here to the next slide. This is just an overview of our audit results to date. As of right now, there are no outstanding matters, so we will be able to issue our opinion later on today over these financial statements. As Kim alluded to, there are multiple opinions we do issue. There's the first, which is over the basic financial statements, which will receive an unmodified opinion. That's the highest level of an opinion that we can issue. It says that the financial statements appear to be free from material misstatements. Related to the supplementary information schedules that are put together by management, we will issue an in relation to opinion of those schedules, which will also be unmodified. We perform procedures over the investment compliance requirements in accordance with Section 2013 of Title II of the official compilation of codes, rules, and regulations for the state of New York, and again, had no matters identified related to that process. We also do issue a yellow book report, which is the report on your internal controls over financial reporting. And within that report, it will note that we did not identify any significant deficiencies or material weaknesses during the course of our audit procedures. Over here on the right, it's just the summary of those adopted standards. We did talk a little bit about 91. There are two other standards that the authority adopted this year. Those would be GASB statement number 87, which was leases, and GASB 91, which relates to subscription-based and IT arrangements, or SBITA. These were new pronouncements which brought on some assets and liabilities to the books of DASNY related to agreements that were previously only disclosure only. They relate to these assets that DASNY has acquired over the years and utilized in their operations for lease that are leases, such as old operating leases. Under the old world, those would be disclosed in expense. In the new world, they're now captured at a present value on your balance sheet. If we could go to the next slide. This next slide is just kind of a summarization of our required communications. There are several that are typically made. In summary, where there's an X noted to these, we've identified that there's no matters to discuss today related to these matters, being that nothing was identified throughout our audit related to this. This covers disagreements with management, difficulties or contentious matters throughout the audit, or any sort of subsequent event matters that would be identified. The next few slides will cover some of the more significant items that we go through. Related to illegal acts and fraud, we did not identify any actual or suspected fraud involving management, employees, or others with significant roles in internal controls. For our independence, we do confirm today, as we always do, that we remained independent accountants with respect to DASNY under all relevant professional and regulatory standards. And we have made several inquiries to date through several members of management, as well as those charged with governance, and have no matters to report related to those. The first matter we have here just kind of is our audit misstatement. So during the year, there was one matter we did identify that is an uncorrected audit misstatement. It has to do with DASNY's non-GAAP policy for accruing payables subsequent to year end. This is a difference that we've had historically speaking. Management evaluated this difference upon identification and concluded it wasn't material. We reviewed the information as well too and deemed that it was an appropriate determination. So we do have this uncorrected audit misstatement, but again, it does not impact our overall audit opinion. The next slide just talks about your auditor's report that we do expect to issue it. There is one matter that you'll notice that is a little different in this opinion compared to what you may have seen in the past. There will be an emphasis of matter paragraph. The design of this paragraph is just to communicate certain items related to these financial statements that are unique in this year that are not typically there. For this year, it's just the adoption of those new accounting pronouncements by DASNY in 2023, specifically GASB 91, which would change what the users would have historically seen in your financial statements. It concludes ultimately that our opinion is unmodified to this matter, and we have further information within the presentation here. With that, I'm going to turn it over to Ryan, who'll take us through our significant policies.
Thanks, Jeff. So the significant policies and procedures of DASNY are described in note 2 of the financial statements, and they're performed in accordance with US GAAP. During fiscal year 2023, there were no significant transactions recorded that we are aware of that lacked authoritative guidance or consensus. To go into a little more detail about the recently adopted accounting pronouncements, as Jeff was talking about, just some of the procedures we performed. GASB 91 conduit debt had the largest impact on our audit procedures. And for part of our audit procedures, we gained an understanding of management's analysis and process for the identification of activity related to conduit debt for state institution debt. We reviewed management's determination over bond issues to ensure appropriate classification. And we reconciled opening balance adjustments for the conduit debt to March 31st, 2022 balances that was tested in our prior year audit test work. And we also reviewed current year bond offerings and classification determination by management to ensure proper classification between conduit debt and state institution debt. And as noted to the right here under our results, there were no audit differences noted. Moving on to GASB number 87 and 96. Similarly, we met with management and held meetings to gain an understanding of management's process for the identification of leases and SBITA. We obtained management's schedule of leases and submitted and agreed the beginning balances as well as the end of the period amounts. We haphazardly select a sample of leases and obtained the underlying support such as like the lease agreements, and we recalculated the opening balances and the lease terms, and also performed a roll forward of the lease sample from the beginning year balance to the end of the year balance to ensure proper recording within the period. And again, under the results, you'll see that there's no differences noted here. Moving on to the significant accounting estimates, similar to prior year, we have two, the first being the total OPEB liability. The engagement team reviewed the underlying assumptions and inputs, and we determined that there were no indicators of unusual or inappropriate management bias during our review. Management's process to formulate these sensitive accounting estimates, including fair value estimates, appears reasonable. And overall, we were able to determine that the total OPEB liability calculation was performed in accordance with GASB number 75. Similarly, for the fair value estimates, fair value of investments, we determined that there were no indicators of unusual or inappropriate management bias during our review. Management's process to formulate these accounting estimates, again, appears reasonable. And for the fair value of investments, we prepared an independent expectation, and we're able to determine that the fair value of investments calculation was performed in accordance with GASB number 72. Moving on to the significant financial statement disclosures, note 70 for conduit debt. Similar to how we tested regular state institution debt, we sent out third-party confirmations, and we vouched the responses to all the underlying support and documentation related to this disclosure. And again, we noted no matters identified and no other issues there. Finally, for other information, for the required supplementary information, similar to prior year, we performed limited procedures, including inquiries and meetings with management to determine their process for preparing this information, as well as comparing to the basic financial statements for consistency purposes. And again, on the right, you see the results. There's no material inconsistencies identified. Now I'll pass it back to Jeff to go through the inquiries screen.
So this screen we've just included here is more of a informational purposes to identify what type of inquiries we would have asked throughout our audit process. And based on these types of inquiries, as I identified earlier on, there were no matters identified which caused us concerns related to the audit, no matters of fraud identified as well, related to any illegal acts from that standpoint. The next few slides are more for informational purposes than our appendices. They kind of talk about KPMG's overall audit platform that we are now using, the KPMG Clara, and how that's using a little bit more data and analytic as we continue to do our audit procedures, again, here for more informational purposes. And the next has to do with some of KPMG's published reports that we put out, which has a lot to do with our overall audit quality report, transparency, as well as our impact report related to how we are meeting against our goals aligned with people, planet, prosperity, and governance. This is here for informational read. The links within the articles will direct you right to those articles if you're interested. But if you have any questions, you can obviously reach out. So again, that concludes our prepared remarks for today. Unless there's any questions, I will turn it back over to Kim.
Thank you, Jeff. Turning back to the financial statements included in tab 5, the audit committee tab of new materials, I'd like to review some of the more significant items that were included in this year's financial statements and provide you with highlights of DASNY's financial results for the year. Beginning with the executive summary on page 7, highlights of our lines of business included debt issuance activities limited to conduit debt borrowings for the year, issuing approximately $3 billion in debt. We did not issue any bonds on behalf of the state this past year. On the construction management side, we continued work on the new academic building on the campus of FIT, the new school of nursing at Lehman College, and a Wasting Hall at SUNY New Falls. Additionally, work got underway at the Western New York Psychiatric Center. From an accounting standpoint, as Jeff and Ryan previously noted, we adopted GASB Statement 91, conduit debt obligations. This is meant to clarify the definition of a conduit debt obligation and establishes that a conduit debt obligation is not a liability of the issuer. As such, all debt deemed to be conduit has been removed from the basic financial statements. As a result of adopting this pronouncement, DASNY has restated its beginning net position by a reduction of $37.4 million as of April 1, 2022. We also adopted GASB Statement 87, leases, which establishes a single model for lease accounting based on the principle that leases are financings of the right to use an underlying asset. Under this statement, as lessee, DASNY is required to recognize a lease liability and an intangible right to use asset, and as lessor, recognize a lease receivable and a deferred inflow of resources, which is intended to enhance the relevancy and consistency of information about DASNY's leasing activities. The impact of adopting GASB 87 was recognition of a right of use asset and a corresponding lease liability, excuse me, of $38.9 million, and a lease receivable and deferred inflows of resources of $2.4 million as of April 1, 2022. Lastly, we adopted GASB 96, subscription-based information technology arrangements, or SBITA. And similar to GASB 87, GASB 96 establishes that if a SBITA results in a tangible right to use subscription asset and a corresponding subscription liability. The impact of adopting GASB 96 was recognition of a right of use subscription assets and corresponding subscription liability of $0.7 million at April 1, 2022. Turning to our financial results, overall, the financial statements reflect an increase in our net financial position of $76 million, the majority of which is activity in our restricted funds. DASNY's operations showed a surplus of $2.5 million, which reflects a small surplus of $0.4 million on the public side and a $2 million surplus on the private institution side, primarily due to a $1.8 million surplus for financing and bond administration, and a credit or reduced allocation of OPEB expenses due to improved discount rates. In terms of debt issuances, as discussed on page 9, DASNY did not issue any state institution debt this year. All issuance activity related to that of our conduit borrowers. On pages 10 through 12, you'll see we had $6.3 billion in bond retirements for the year. Approximately 81% came from defeasances and early redemptions, with the remaining 19% from scheduled redemptions. There were no refundings by DASNY bonds, as there were no bonds issued for the year. The majority of bond retirements were a result of large repayments provided by the state at the end of 2022. Moving to pages 12 to 14, we ended the year with $54 billion in outstanding bonds, a decrease of $5.2 billion from 2022. The split between state institution and conduit bonds shifted slightly to 61% and 39% in 2023, from 67% and 33% in 2022 respectively, primarily due to large prepayments and no issuance activity in 2023 on behalf of state institutions. In terms of our construction management line of business on pages 15 through 17, our total construction and loan disbursements increased approximately $300 million in 2023. Increased disbursements for DASNY managed projects were largely driven by increased project activity in the SUNY program. Turning to page 19, DASNY's statement of net position increased $76 million in 2023 compared to 2022, as we stated, primarily due to improvement in short-term interest rates. Decrease of approximately $6.9 billion in assets and liabilities were largely driven by the net decrease in bonds outstanding, the related loans receivable, and cash equivalents. Restricted net position increased by $69 million, primarily due to increased investment income, and net investment in capital assets increased primarily due to the implementation of GASB's 87 and 96, with the recording of a right to use lease asset and subscription IT asset. On page 20, you can see the total investment balance of $6.4 billion reflects an increase of approximately $2 billion, primarily due to prepayment of debt service obligations by the state, offset by disbursements for construction projects and grant programs, with no corresponding deposit of new proceeds from bond issuance activity. Additionally, money market funds saw a $5.4 billion decrease from the prior year, largely due to improvement in short-term treasury rates. DASNY's total investment portfolio has decreased to approximately $6.7 billion. Also included within your materials, we have the supplementary information that is provided with the financial. Those include schedules that break out our financial statement by program type and DASNY's operations, DASNY's budget and actual expenses for its operation, and a schedule of outstanding bonds and notes. We are required to submit the auditors report and basic financial statements to the Office of State Controller by June 30th. During today's board meeting, there will be a resolution for the board to approve adoption of the basic financial statements as of and for the year ended March 31, 2023. Before I conclude, I would like to take a moment to thank the people that made the receipt of these results possible. In addition to the usual tight deadline, staff were charged with implementing 3 new GASB pronouncements, all of which impacted financial statements, in addition to additional footnote disclosures. They worked diligently to ensure Proper coding changes were made to the system, identified all leases and IT subscriptions to be considered for GASB 8796, and performed the necessary calculations to determine our lease and subscription liabilities and assets. Once again, I've been able to rely heavily on their experience, knowledge, and dedication of the finance staff to maintain our books and records accurately, to provide the necessary support to our independent auditors, to ensure that we continue to receive unmodified opinions, and to ensure that our financial statements are filed with the state in a timely manner. In particular, I would like to give special acknowledgement and thank you to Lee Zhu, who's our Assistant Director of Accounting, who, in addition to overseeing this year's audit, is preparing her family to relocate out of state effective next week. Due to family commitments, she will be leaving DASNY effective Monday, but will be available to assist in transition efforts as we look to find her replacement. Throughout the audit, Lee had the support of Steve Winters-Bona, the Assistant Director in the Debt Unit, Stanley Reed, the Assistant Director of Investments, Jeff Arnold, the Director of Budget and Operations, Kelly Ray, the Manager of Accounts Payable, and Tanette Tomlin, Senior Financial Analyst of Debt and their respective teams. Without the dedication and oversight of these teams, today's audit results would not be possible. I would also like to thank Shia Wu from our internal audit team who supported KPMG during the audit process. And lastly, thank KPMG for their role and support in making the audit run smoothly, and appreciate their continued professionalism in conducting the audit. That concludes my report.
Thank you, Kim. Do you have any idea or sense of how much time goes into the preparation of these? This is just blows your mind when you
A
think
lot.
about the man hours or staff hours that goes in, because you only have really 90 days to get these done. And for those folks that aren't aware, it's critical that they're done by June 30th,
Yes.
because they're all submitted, as you said, to the controller's office, who has to have the consolidated financial statement prepared and completed by August 15th. So it is critical to have these done. And I think DASNY is probably one of the most complicated of the authorities. So kudos to you
Thank you
guys
so much.
and to KPMG for your timely work. We appreciate it. I would like to move to have the audit committee recommend approval of the financial statements to the full board. Could I have a motion?
So moved, it's Beryl.
Thank you, Beryl. Second.
Second, Lisa.
Thank you, Lisa. All in favor? Aye. Okay, so we will move to recommending to the full board, although I think the full board is here, at the next meeting, the acceptance of the financial statements. Can we now move to a review of the annual investment report?
Yes.
And one more time, Kim.
One more time. Thanks, Joan.
You're welcome.
The next report is the annual investment report, which DASNY is also required to file with the Office of the State Comptroller. The report includes our investment policy and guidelines and summaries of investment income earned and fees paid for the year. A copy of the DASNY financial statements will also be filed with the report. There was one exception to the investment policy and guidelines approved at the August 10th board meeting, allowing for the investment of up to $50 million in a private credit fund. There were no other changes to our investment policy and guidelines during the year. Investment income totaled $112 million for the year, 1.4 million of which was earned from construction funds, with the remaining 110 million from all other funds. An additional 43.3 million was earned on the investment of conduit debt related bonds and note issue proceeds, along with the reinvestment of existing funds related to conduit debt, which is not reported in the basic financial statements. During 2023, DASNY paid approximately $799,000 for trustee and custodial services. Any questions on the investment report?
Anyone have any questions? Audit committee or board members? If not, could I have a motion to recommend to the board the approval of the annual investment report?
So moved, it's Beryl.
Thank you, Beryl. Where are you, Lisa? You're Lisa, all in favor? Aye.
Aye.
All right, thank you. The next thing I want to do is turn it over to Ruben to talk about the Public Authorities Accountability Act report, internal report, annual report. Ruben?
Thank you, Joan. Just briefly, as we go through the meetings today, we have several different reports we have to submit to various state agencies and authorities. This report is one that is for authorities. We have accountability requirements to make sure that we aren't doing things outside of the general state oversight. So it's a standard report. You have in your package. You know, thanks to the staff who helped prepare that report. It is a report time of year for us. A lot of people do a lot of work on writing and assembling, and certainly Jeff Gordon and his staff have done a great job of communications, getting all on a nice, pretty package. We were just That's all I have, Joe.
Okay, thank you. Could I have a motion to recommend to the board approval of the Public Authorities Accountability Act Annual Report?
So moved.
Thank you, Beryl.
Second.
Thank you. Thank you, Lisa. All in favor?
Aye.
All right. I think next I'd like to move into executive session. May I have a motion to go into executive session to discuss the financial history of a particular corporation and matters leading to the appointment, employment, promotion, demotion, discipline, suspension, dismissal, or removal of a particular person or corporation. May I have a motion?
So moved.
Who's that?
Wellington.
Wellington, second.
I'll second.
Thank you, Beryl. All in favor? Aye.
Just for clarity, it should be somebody on the audit committee. I'm sorry, I appreciate the motion, Wellington, but Lisa.
All right.
Moving things along.
Lisa and Beryl.
Thank you for your enthusiasm, Wellington.
Ready to record?
So we've just concluded an executive session. No action was taken in the executive session other than to return to the public session. At this point, I'd like a motion to adjourn the audit committee meeting.
So moved, it's Beryl.
Thank you.
Second, it's Lisa.
Lisa, thank you. All in favor? Aye. Great. The audit committee meeting has adjourned.
Well, we will take